All right, everybody, let's have a look on upcoming RBNZ policy rate decision, which is coming at today around about 8 p.m. Eastern Standard Time, and on a my time, it's gonna be 9 p.m. Atlantic Standard Time. So, market is widely expecting for a 50 basis point cuts, and just another thing to keep in mind alongside this policy decision is that we're going to have a quarterly monetary policy report statement. So, why this is important? Because okay, so why this policy quarterly monetary policy statement is important because we get the projections that what the bank thinks that can happen in the upcoming maybe a year ahead from now, a 2 year, and in a 3 year period of time. Alongside that, we're gonna have a RBNZ rate statement. We will look for any clue that what they have to say in their statement. I hope that they go for something hawkish. So I do have some of the scenario planning that I have just prepared, and let's have a look over my scenario planning. So I have currently three scenario plannings: dovish, neutral, and hawkish, as you can see on the screen. First one is dovish scenario. If we get a 50 basis point of cut, as market is currently priced in their quarterly projections, let me point out that onto you. These are the quarterly projections, and if we get anything less than these projections, let's say they go from GDP projections, they're lowering their forecast for 2025 to 2027 from zero point 0.6 to anything close to zero point 0.1, 0.3, going for CPI inflation quarterly from zero point 0.5 to zero point 0.3 across the board till 2027. And for CPI inflation reports, same thing for unemployment rate, taking it to the higher from 5.2 to 6.1, maybe something like that. And for the cash rate, they are lowering their cash rate more aggressively. So this is something I'm really looking to have a look right now. Currently, as for the dovish 50 basis point, alongside with lowering their growth, labor, and inflation forecast with more aggressive easing in OCR. And after that, we're going to have a press conference, and the time for that press conference is okay. Let me just see that just after an hour, Governor Orr speaking to the press. Uh, and I think it's in the press. Alongside that, we also gonna have some Trump commentary, which I think will put more weight on market, probably more focused on Trump's side than a speech from the governor. Or but again, both of these two things are important for the markets, and we will look for what Governor Orr has to say on this policy. If she's get in line with the dovish scenario and saying that she is really concerned about the growth of their economy, and also going with the dovish risk statement, it's clearly a sign that the yeah that we can go for uh, not convincingly, but for a scalping point of view, can go for a weakness in the kiwi for some sort of, maybe for a day or for 2 days, before I think this pairing back its all of its losses. So uh neutral scenario right now I have is going for a 50 basis point cut, which is widely expected. They are not making any changes to their OCR projections, just saying that we're gonna stick to the data dependent approach and leaving the markets with wait and see scenario, which clearly can give us any market edge to trade. In this neutral rate scenario, market don't know what to do because everything is already priced in for that movement. So last thing, which is kind of my personal favorite, if you may ask me, is the hawkish scenario. Going for 25, I mean, if they go for 25, it's gonna be huge deal for the markets. Going for 20 50 basis point, it's the same story, but hear me out. If they go hawkish projection showing that they see a decent recovery in growth, strong labor, and higher inflation completely beating the market pricing of 110 basis points of cut by the end of this year, stating that, hey, market, you are pricing really aggressively, and we are not going for that. Because if we look at the OCR projections here, and 3.1 is priced in for 2027, and if we look at the store markets projections, they're already pricing in 3.1 uh, percent by the end of this year, which is very, very aggressively. So with that being said, anything they have to say that we're not in a hurry to cut aggressively, and they stick to their statement, and their projection is clearly a sign for going long on the kiwi side. So on the last note, I have stated that most of all, I personally like to see a hawkish outcome from a RBNZ side, as the current housing is repair is going to be one of my favorite pair to trade, which is sitting close to strong resistance. So that was my scenario planning for the RBNC upcoming rate season. Now let's have a look. Is it really reasonable for going for a 50 basis point of cuts? That's the thing we should ask ourselves. So now, if we look at the GDP, we can see that clearly from a technical point of view, RBNZ currently sitting in a recession. Uh, their quarter second of GDP was negative 1.1 quarter of quarter, and negative 0.5 was year on year, and followed by quarter three negative 1 and negative 1.5, which is clearly stating that the economy does need a 50 basis point of cut. And I'm clearly supporting the current market point of view that going for 50 basis point is reasonable. And looking at the unemployment rate, uh, it is currently sitting close to quarter three 2020, which was 5.2%, and currently we are at close to that level, 5.1%. And anything above that, this 5.1 is really going to put pressure on the RBNZ to go for more aggressive rate cut in the upcoming uh, policy rate decisions. So growth perspective, labor perspective, and from the inflation side, inflation is nicely going to the downside. They have had peak in quarter two and quarter three 2022, which was at 7.2%, and now see where we are right now, 2.2%, which is also clearly allowing the market, allowing the sorry about that, allowing the RBNZ to go for another 50 basis point of cuts. So if we see the aggression they have made during their rate cycle, they got from 0.25% to 5.5% within a range of 1 to 2 years. It was really aggressive rate hike, and same thing, the aggression they have shown in the rate hiking side, we are expecting that the aggression of easing will be the same. So overall, with economy technically in recession, unemployment is ticking higher, inflation is sitting down. Clearly, the economy does need a 50 basis point of cut, uh, and the statement and the forward guidance is going to be the key point to look for this thing. So dovish, neutral, or hawkish scenario, hawkish one is going to be my personal favorite. So with that all being said, all you have a good trading day, and hope you see you guys later.